Hey traders from around the world, this is Jerremy Alexander Newsome with Friday, the real life stock review. Beautiful weather here in Nashville, phenomenal blue skies, about 75 degrees. It is gorgeous. And what else is gorgeous is something that all of my traders right now are viewing. We are live in the real life trading room that we do Monday through Friday from 9 a.m. to 2 p.m. Eastern Standard Time. And I decided to make today's real life stock review inside of this room for two reasons. I am seeing a lot of similarities on the SPY from 2011 to where we are now. And what I'm going to do is try to help create a trading plan for myself about when to go bullish, believe it or not. So here's what's going on. Let me show you really quick SPY on a weekly chart. And I might end up having to rescale my my charts here, so just be a little patient with me, because TradingView doesn't know what's going on sometimes. All right, here's the exponential moving averages, and check out the similarities, folks. Again, I'm just not sold on this bearish move, and I'm trying to do some bearish short-term trades. We've gotten into some, we've made a little bit of money bearish, but longer term, for a lot of the people out there who are really terrified that the market's going to crash, I feel like this is the same feeling that we got in 2011. Now, granted, in 2011, we had the America's credit downgrade happened. We went from like AAA to AA or something like that. I don't know. Anyway, we got downgraded. So let's just look at this from two perspectives. I'm going to look at this from just candles, and then we're going to look at it with moving averages. So let's check it out. White candle, lower shadow in October. Gaps up on a weekly chart. Not very common that it does that, but it did. Bullish retest gap, meaning you got white candles, white candle gapped up. The next week, which is the October 17th week, we get a white candle with a lower shadow. Then the next candle, the next week, we go even higher. On a weekly, you could maybe make the argument this is some type of double bottom pattern, in which case this is the neckline. So people would start to go bullish right here, and or they'd start to go maybe bullish right here. If we hop over here to the exponential moving averages, here's the exponential moving averages. Notice that during this time, again, this is 2011, folks. In 2011, we were below all the moving averages, right? Everyone was wanting to go bearish. Everyone was trying to short the pullbacks into those moving averages. This is the week of October 17th, which, by the way, today is October 16th. The timing is really kind of uncanny. We're battling the 50, the 20, and the 10 exponential moving average on a weekly chart. And we end up closing above them. Then the next week we go a little bit higher, and so on. So now what I'm going to do is I'm going to switch to the daily chart, and I'm going to pull up the long-term moving averages. Oh, it did the same thing it did last time. Snapdragons. So we were just looking at this a moment ago. So let me try to zoom back out here and try to pull up the long terms. If it takes too long, I won't worry about it. But bottom line, the long-term moving averages are pretty much doing then what they might do now. All this is going to do is really just help me kind of formulate a plan for what I want to see before I go bullish. Here's the long-term moving averages right here. Again, this is 2011 charts, late 2011. And here we go. So at this particular point in time, we were below the 100 simple moving average, and I'm sure people wanted to short off the 100 and the 200 simples. So we trade up into this resistance. There's the resistance. There's a nice little upper shadow. And you see we get a nice black candle, which is a one black crow at the resistance. Probably the day that a lot of people hop on bearish. Next day, white candle. Next day, black candle, which would be today. And that candle is the 19th of October. Today's the 16th of October. Again, kind of eerie. Then we trade up to the 100. We fail the 100. We break through. And then this is probably where everyone went bullish, right? Boom, 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 boom. Above the neckline. All right, fine. Once we get above the 200, we'll go bullish. Boom. Big bullish candle. And then they get stopped out. Okay. Double top shows up. Everyone's like, oh, let's go on bearish. Because I did this exact trade. I went bearish back in 2011 right there. I went really hard in bearish right down here because I was like, oh, that's confirmation. Really specifically on the 23rd of November, I bought a lot of puts. And as you can see, the next gap on the 28th of November, the day after the Thanksgiving markets opened, everyone was trapped. We went higher, came, and then just took off. So now let's go to present day SPY and just see if there's any similarities at all to what the market is doing now. Here's the weekly chart on the SPY, and here are our exponential moving averages. So we get a white candle with a long lower shadow. We get a bullish candle, a bullish retest, gap up. White candle gaps up into a really nice white candle. Then the week of October 12th, which is technically 1 week before the one in last 2011, we get a white candle with a lower shadow that's battling the 50, 20, and 10 exponential moving average on the weekly chart. Is that bananas or what? I think that's it's almost mind-blowing, the similarities here. So what am I saying? I'm saying this. I'm saying this is very good chance this is going to happen. A lot of people are going to hop on bullish right there. It's probably not the time to go bullish, because then you've had, really if you think about it, we've gone from 188 to 205 on the SPY. Huge move. We pull back something like this, maybe we get some volatility. We kind of come in here into November time frame, or December, and we probably retest this gap at some level, probably 198, 196. And if we do that and we get any kind of bullish gap up on that time frame, so I'm planning about a month and a half, 2 months away. If we get a strong 3-4% gap up or 2% gap up or a big candle or some kind of bullishness that day, especially if it happens after Thanksgiving, I'm going to go bullish. Long term, short term, medium term. I'm still pretty much long term bullish now, but just kind of letting you guys know. Sound good? Sweet. So that's my general thought on the markets, if you will. I think there's a very, very interesting pattern of similarities. And again, if we just hop back over here to the daily chart, here's the daily chart. We get the long-term moving averages pulled up. Here's the long-term moving averages. You can see there's the 100, there's the 200 right in front of our face. People are going to probably want to short off the 100 and probably want to short off the 200. It's probably not going to work that well. Yes, I do have a bear call spread that's expiring in 2 weeks. And that's what I was mentioning. It might get in the money, but I'm not going to unravel it. It will probably do something like this, but I'm looking to exit the trade in 2 weeks. It might trade up in here into the money, get into like 206, 295, and then retrace a little bit. So I'm going to be pretty aggressive with this and kind of hold through just a tad to see what it does, because again, we have 2 weeks. I'm not going to unravel, but we are getting some reversal signals today on the 15-minute chart on the SPY. Here is a tweezer top on the SPY, and here's a tweezer bottom. My thought is that's today. That's a little bit of a trading range. If we break this high, I would say my theory is 100% confirmed, and I'm really going to wait to see how it's playing out. Probably going to just be very, very cautious trading any index until like November, and be pretty cautious trading some of these stocks as well. I think the market's going to start continuing to really show some people how it has some bullish strength left in it. So just kind of keep that in mind. I think that's interesting. So speaking of bullish trades, CSX is a trade setup that I have bullish based on this candle from yesterday. This is a one white soldier. Entry is at 28.07. The high of today was 28.06. Stop was $26.77. We're making higher lows. We're out of I got some relative highs. We're out of support. If CSX bounces, I'm a little bit bullish. Speaking of Caterpillar, Caterpillar's going to have earnings here pretty soon. I think Caterpillar's an island reversal down here. That's kind of what I'm calling for. And I'm looking for this drawing to kind of take place. I don't know if it's going to take place exactly like that, obviously. But if it does, I'm really, really pumped to see how it plays out and just kind of see how the progress goes down. If it pulls into 67.44 and bounces, maybe with a one white soldier, new white soldier, bullish engulfing pattern, I could be a little bit more bullish than bearish on Caterpillar. Silver, really quick. Here's silver. I am just slightly bullish to neutral on silver, expecting it to potentially go higher. Albert's got himself a October 30th, $16 covered call. Likely will expire worthless, but we got 2 more weeks on that. It'll get pretty close, but should be okay. Here's Alibaba, and he also has a covered call on Alibaba expiring today at 75. Earnings are going to be coming up on Alibaba. Don't know exactly what's going to happen, but man, if Alibaba were to gap up to, let's say, $80 after earnings, that would be a huge move something like this, really, really big, trading up to that, we'd probably sell off a little bit and then maybe bounce, right? Which could kind of follow the general market, if you will, that overall theory of what could happen. I don't know, honestly, what direction Alibaba's going to gap, but this is a really, really strong old support, new resistance. So unless it gaps above there, I think that gap up would be just a little slightly bearish. Apple, not doing anything on Apple until earnings. Very, very sideways, just hanging out. Lower highs. I'm sorry, higher lows, lower highs, trading sideways. Earnings coming up. Excited to see how it breaks out. One other thing as far as announcement, I know this is a long real-life stock review, but just another quick update on the professional trading through a hedge fund. Just making sure you guys are fully aware of what to look for and how this all works. So you come over here to reallifetrading.com, click on log in, and if you're not logged in, you can become a new user. You can sign up, but go ahead and click on your login. It's totally free to log in. Once you're logged in, you can click on the education tab and come to the page, the professional trading hedge fund page, and you'll have all of the videos live for you able to watch. Now, these classes right here are entirely free. They do not cost a dime. Watch them and learn how to trade through a hedge fund, because that's what Real Life Trading is going to do. We partner with a company called Bulls on Wall Street, and for those traders who are interested in doing some leveraged day trading, this is the route that you can go. So the way it works is you can understand how to do your leveraged day trading through these videos, watch it, understand how the process works. Then you're going to have to pay for the educational test and videos that are going to be hosted on the Bulls of Wall Street website. So if you watch class 1, that's going to explain everything there, right? The videos, the tests, and everything is posted on that on their site. That's the test that you have to pay for. All right, it's an educational-based product, and once you take the test, once you pass the test, you can probably honestly pass it in an hour. I wrote it 2-3 weeks ago. It's a good test. It's not overly easy. I'm just saying don't study for days for it. You can take it in one day and you'll be good to go. You do not need a Series 56 because this is not proprietary trading. You're not using a proprietary firm or prop shop. You will be trading through ClickFund once, and if you pass the test and if you meet the eligibility requirements, you get approved to trade through the funds, and they provide the funds for you to trade leverage day trading through. So I explained that a lot in class 1. I sent out another email about that yesterday. There's a lot of excitement about it because that's really what I wrote the article Retire on 3K about. Retire on 3K is about taking small amount of money, like $3,000, getting leverage for that money so that you can have the ability to day trade without having a $25,000 account and being able to trade, Apple, Spirit Airlines, PWR, Twitter, Alibaba. You can trade those day in and day out with leveraged day trading. And I think the commission structure is incredibly inexpensive, and it's a really, really great product. So if you have any questions about that, feel free to email me anytime, Jerremy@reallifetrading.com. You can also go to Bulls on Wall Street and learn more there as well if you have any questions also. Thanks so much for watching this Real Life Stock Review, folks. I really do appreciate it. Have a great weekend, and I'll see you next time. And until then, remember, love life, live life, and trade it. See ya.